Welcome, everyone. Thank you so much for tuning in to this episode of the Vancouver Life Real Estate Podcast. Today, we are going to have a chat about the month of September, which has been an absolutely tremendous month. Actually, in line with what we've seen in the last couple of months, growing prices, activity levels are soaring through the roof right now. Anyways, we're gonna take a dive into the first half of the podcast. Will be really kind of dedicated to more conversational style, what's happening in the market, and then for the super nerds, we'll hit the numbers in the latter half. So if you want to hear quickly what's going on, tune into the first half, and if you really want to find out what's happening, look in the second.
Perfect. The headline that everyone has probably heard is that September was the all-time highest sales volume month for September ever recorded.
Yeah.
Which is just fascinating. I know there was a lot of people back in August when we saw August be so high thinking, it's just the last of the carryover from the pent-up demand and whatnot. But I think September put any kind of doubt to rest about how much interest and demand there is in buying real estate right now.
Yeah, certainly, August is not a fluke if you look at September. It pummeled it.
Yeah.
Look, to begin the conversation, the month of September, when you compare it to the 10-year averages, so the last 10 years of Septembers, were 44.8% above the 10-year average. That's just a staggering amount.
Such a massive number. And let's keep in mind, 10 years, right? The biggest volume years that we ever saw, along with the price increases, was 2015, 2016.
Yeah.
Phenomenally insane numbers and an insane time. And we're above that, inclusive within the 10-year average. It's
totally
fascinating.
Yeah, and I think maybe one of the big differences there being the prices were maybe jumping by that amount, whereas now it's activity levels that are jumping by that amount. But it's important to know that activity levels are always a precursor to price, right? So not to say that 2016 or 2015 is going to happen again. I have no idea. But certainly we're seeing positive trends when it comes to growth numbers, right?
Yeah, absolutely. So price-wise, the overall prices did increase in September.
Yeah.
I don't think there's any surprise there based solely on the volume.
Yeah.
We saw a 0.3% price increase over just the month before in August.
Yeah.
But year over year, the average Vancouver home, we're up 5.8%.
Yeah, nearly 6%. Well, when I look at that, it's interesting. I look at that, month over month gain of 0.3%, and that kind of tells me that we are appreciating I guess not a modest rate, but we're appreciating at a sustainable level.
Well, sure. 0.3 would be 3.6% over the year.
Yeah, right. So that's a very sustainable level of growth where, and you look at 6%, there's a bit of the COVID push there. There's pent-up demand that's in that number. And then, you're looking at roughly, I would like to say that the province is probably looked at 0.5% a month, right, in terms of overall growth, which is phenomenal.
Yeah, and very important to point out here, too, these numbers that we're pointing out here or referencing, these are the Real Estate Board's HPI numbers, right? This is the Housing Price Index numbers, which is, without getting too deep into it, this is an algorithm that they've designed that essentially gives you a bit more of a true market average pricing based on demand and demand for certain properties as well. So, I think as a secondary reference, right, because you always want to get more data to give you a real accurate picture of what's going on.
Yeah.
We can also look at the median price and the average price.
Right.
And if you're ready for this, both median and average home prices are at an all-time high right now. September, highest prices ever recorded. This is higher than 2016 we're talking about.
Yeah. And now we got to look at, how does that compare in terms of let's just look at maybe last September, right? Because last September, again, like every last month, was the last normal month, albeit in a downward market that we saw, right? And September 2019 versus September 2020, the difference in terms of, before I actually just units sold here, we're looking at 56%, 56.2% to be exact, in terms of year over year activity growth.
Right. Yeah.
That means if Dan and I weren't looking last year, Dan is.
Right.
Right?
Sure. Yeah.
And I'm starting to think about it. So, and
and interestingly, September of 2019, again referencing the HPI price, that was the very bottom of the cycle, the most recent cycle. So we've been on an almost upward trend consistently since then, like 12 months of upward pressure in prices. And this dates back to or goes back to about a $985,000 price point.
Right.
And now we're over $1,040,000 in 12 months.
And then you look at so the actual sales numbers. So last September in 2019 was 2,300 sales, right? We're at 3,600 and counting, right?
Big jump.
It's a huge jump by comparison. So I think it's important for us to kind of maybe talk about now, why does that matter, and how does it affect our listeners, right? And I think, it's a tale of two stories here. It's not just everything's going up, because it's just not the case. When you start to unpack maybe the high level stats and you start to look at the local stats and the micro markets, you're going to see quickly that there's a lot of movement happening here, a ton.
And this is exactly why it's very important to read beyond the headlines,
Yeah.
right? When you hear all-time high prices, when you hear record-breaking sales volume, it all kind of sounds positive, but there's a lot more going on behind the scenes than just generally encompassing all real estate and all of GVRD into one unified item.
Which is what, most of the calls that Dan and I get are, hey, the market's doing really well. And it stops there.
Sure.
Right. And it's like, well, okay, yes, generally speaking, but where do you live and what do you own or what do you want to buy? Right. Because if we look now at detached home inventory versus apartment inventory, it's a different story. Like detached home inventory right now is sitting at a 6-year low. Right. And apartment inventory, conversely, is at a 6-year high. But the market's in a seller's market. Dan, explain this to me. I don't.
It's because we're coming off of a low baseline in inventory. Yes, we are going to see the average condo starting to decrease in price. And there's obviously some areas that are going to accentuate that. But based on, again, coming off of a low baseline of last year, there's still a fair amount of demand that's eating up a lot of the supply.
Right.
And we'll dig into that a little bit later. But that's kind of why it's still the seller's market, because the sales to active listings is what's throwing it off in a sense.
So apartments are sitting at 6-year highs. And, we've talked in the last couple of months about this general repurposing of real estate, right? And why are condos sort of rising in supply numbers, and the supply of condos is outpacing the supply of other inventory. But when you look at the activity levels on the other side of the inventory, like single family homes and detached, they're doing so well that they're kind of pulling the condo sales along with them, right? So it's like when tech started doing really, really well in the States, they brought the overall stock market up because they were outperforming, and so much of the marketplace was involved in tech. Like so much of our money is involved in single family homes, that if they start to do well, they pull the whole market with them. But that's not what's going on here. And I think we need to illustrate that. You also look at the strata crisis, right? The insurance premiums that are rising through the roof right now. Condos are under attack. COVID has more or less told people not to live in a dense area, which is what condos are, right? And then you add that to the fact that they're experiencing a strata insurance crisis, and that it's very difficult to get insurance on a property right now, if a stratified property. And then the demand, you take the demand by closing the border. And it's just an assault on condos right now, and people want space.
For sure. All the investors who had these condos rented as Airbnbs, that market's gone. So they largely either flooded the market with long-term rentals, which brought down your rental prices. We're seeing rental prices down 10 to 14% right now for 1 2-bedroom condos downtown. And so if, let's say, you are a little overextended, maybe you're a bit of a speculator, and now you're panicking. These people are offloading some of these condos as well.
Totally.
Right? We've just seen downtown, we've just hit the 1,200 active units number downtown. And as you said, it's a 6-year high and rising quick. This is up 1,000, this is up 100 from last month and increasing steadily. We could see 1,300 plus by the end of October.
At which point you're going to see a battle for prices. Right, it's going to be competitive for prices, and I think if you're looking as a buyer, I think for condos, I mean, there's an opportunity here for sure. Whether or not it's now or if it's in 6 months, I'm not quite sure. That's going to largely depend on what we do as an economy, and specifically with the border too. But ultimately, the other asset classes are going to continue to grow in favor. And it kind of also accentuates the economic divide that we're also witnessing here. There's a lot of people who have made a lot of money in the last little bit, and we're seeing that, right? Whereas people that are struggling to rent an apartment, it's getting harder for them, right? So anyway.
Yeah, so let's lean in a little bit about this activity levels that you were talking about. So they are accelerating. So this is what's kind of interesting. We're coming off this low baseline of inventory in September. I mean, it was a huge. There was 6,400 units.
Detached
listed. All in, and this is like almost 32% increase compared to last year. But. And even a 10% increase over last month.
Which is
a huge number. But so what's happened is I think we've largely come off of a low baseline of inventory for the last 9-10 months kind of thing. And it's been largely eaten up, but it's now starting to outpace the demand.
That's right.
At least, let me bite my tongue here. At least in, like you mentioned, the condo market. Right? They cannot release enough detached homes to kind of...
That's right.
To keep up with that. But
the disparity between the supply of condos and the demand for homes is just not in line with each other, and the prices are going to start to swing now. Where the demand levels are there, the activity levels are there, and we're starting. I think this month was the first time we had seen, even though it was in a seller's market, it was the first time we saw condos drop in price by 0.3%.
Right.
Which is something we have been calling for the last kind of 6 months.
Sure.
Pre-COVID, anyways.
Yeah.
Or post-COVID, I should say. Anyhow. Let's look at maybe why the demand levels for these particular homes are being, or why are they so high? What's fueling them, right? Because I know there's a global pandemic, and that's part of the reason. That's maybe changed the way people are thinking. But I think the financial world is also inducing that change.
Definitely. When we have the government basically overstimulating the financial or economic losses, people have more money to spend now, which sounds
strange,
obscene, in this environment. So, and of course, we also had 6 months of mortgage deferrals. We had
a lot of savings have taken place.
That's it. People literally. You look at the stats data, and people have more savings in the bank now than they've had in, I think it was 33 or 43 years.
Yeah. Well,
So there's a confidence level.
Yeah, and that money is going to get spent.
Yeah.
Right? And spent wisely for the most part.
Yeah. And a lot of the jobs have come back. And let's always keep reminding people that the high net worth or high net income jobs were never really lost.
Yeah. And so much of this purchasing power too is being exacerbated by very, very, very low interest rates, record low interest rates that we're still seeing are coming down. They still haven't stopped, right?
Every single month we come on here and we talk about the new lows.
But what is the new low?
The new low, this is not an anomaly anymore. Yeah. I've had 3 clients just in the last week hit this number, 1.65.
But that's fixed.
That is fixed. And
not variable.
That is fixed. Yeah, 1 year fixed, 5-year term on a primary residence.
If you have a mortgage right now and you were paying more than 2% on that mortgage, you need to call your mortgage broker or your bank, and you need to get that done and dealt with because you're spending too much money right now.
Yeah,
you are.
There is the high likelihood, weigh out the options, find out what your penalty costs versus how much you would save monthly. But yeah, Ryan said it. If you have a mortgage that doesn't start with a 1 in front of it, there's a good chance you can save yourself some money. So please talk to your broker, talk to your bank, and see what they can do for you, because every single month it gets lower. And to be honest, there's talks of it going lower.
Yeah.
There is. We know some countries have negative interest rates right now.
Which means it costs you money to put your money in the bank.
Yeah.
That's the way to think of that.
So in comparison, Canada doesn't look as bad. We're one of the higher rates going. Yeah. So it is rumored already that rates might even go down. I don't think we're going to see something sub 1, but we seem to be surprised every month here. So we're going to keep tracking it and, keep being, I guess, grateful for this inexpensive money that's helping people buy into the homes they really like and being able to do it fiscally responsibly.
Yeah, I think that's a big part of it too. Being fiscally responsible right now, it should be at the forefront of the way you think financially. It's really hard to know what's going to happen in the very near future. And the position that we've currently worked ourselves into right now is something that we should do our best to protect, right? There's a lot of countries in the world not doing half as well as we are. It's reflected in just in COVID cases and shutdowns, right? Mm-hmm. So anyways, when you look at the total supply of this year versus last year, even though there's more property coming on in the latter half of the year, supply, generally speaking, is down by about 2.5% compared to last year. So that's also helping to fuel a bit of price increase and certainly activity levels, right?
Okay, so let's dig into a bit of the sales to active listings ratio. This number indicates the amount of homes that have sold versus how many were listed. Essentially, anything over 20% indicates a seller's market, and these always are independent of one another, between apartments to townhomes to detached homes, and they're very indicative of what's going to happen price-wise when you kind of watch the trends of what has happened, and you can kind of help predict what may happen. Yeah,
I mean, when you know that prices are a lagging indicator to activity levels, then you watch the activity levels, right? And that's what the sales to active is. Think of the sales to active as activity, right? So when you look at detached homes, for example, just generally speaking, anything above 20% is a seller's market, right? So we're looking at 28.3% for detached homes, and that's up, I think, a couple percent from the month before, which is showing that the activity levels is well inside of a seller's marketplace for a detached home and climbing, right? Mm-hmm. The interest level is also climbing. If we unpack townhomes too, I think townhomes last month was leading the pack by 30%.
32, yeah.
32, and we're at 36.1% here.
It's accelerating.
Yeah, it's getting more active for that type of price, for that type of apartment, mm-hmm. or that type of property.
Right.
And I think, townhomes, duplexes, that style of living, in large part is going to be the future of construction. I think you're going to see a lot of duplexes being built in the future, a suite of duplexes, as we look for different ways to get people into more space and not have it break the bank like it will with a detached home.
That's it. It's still all about affordability. Yeah. It probably always will be. Yeah. And like you mentioned, you can get a comparable townhome to, again, I'm referencing the size of a detached, right? Exactly. A nice 3 or 4 bed townhome. And you can get them for, let's call it 30, 40, even 50% of a less purchase price than that detached. Yeah. Sure, you're maybe not getting the big yard, but the livability is similar, and it's obviously an attractive price point, and that's why it's so in demand right now.
And really the other big part of that is that you actually get to be in the neighborhood that you want to be in. You know what I mean? Like, you might not be able to afford a home there, but if you can get a sizable townhouse, maybe a suite of duplex or something to that effect, you're still in the neighborhood, right? You're maybe not getting all the space you want, but you haven't left your neighborhood, right? Mm-hmm. And that's why we're seeing townhomes are very popular, because they kind of, they're not as dense as condos, right? But you don't lose necessarily the neighborhood while you gain some of the second, third bedroom aspects of detached living.
Mm-hmm. And lastly, of course, we do have apartments, 24.8%. So still a seller's market, which is interesting. Yep. But again, we're going to do a deep dive into that because we think that is going to be changing pretty quickly here.
Yeah. And I think the first real indication of that is the fact that prices are actually dropping now for condos, right? And also to mention the fact that we're at a 6-year high for supply. Mm-hmm. There's only one way to deal with that.
And similar to pricing, when we discussed how we kind of hit that bottom of the cycle back in September of 2019, well, here's an interesting indicator. The sales to active listings ratio hit bottom in January.
Interesting.
So about 9 months prior. So the sales to active listings ratio went from 10% up to about 17% in September, and that's when the prices changed.
Interesting.
Right when we went from from a buyer's market, we entered into
a balanced
balanced market,
Yeah.
and then quickly after it was sellers, and that's why the prices have gone up.
That's right.
So it's a very interesting and predictable. I guess reference point is to track the sales to active listings ratio, because prices will follow, whether that's up or down or even flat.
Yeah, totally. Absolutely.
Another very interesting metric that we just caught that I think is important to share is the high end, the ultra luxury market seems to be really catching on fire right now. And what we mean by that is 45% of the homes priced at or above $8 million and sold in 2020 happened in the last 2 months.
Holy cow.
Yeah. That's a very interesting stat. So I believe the number is 31 homes total have sold over the $8 million price point. 14 of those have sold in the last 2 months at 7 homes apiece.
And is that primarily in West Vancouver?
And Vancouver West. Don't forget that.
West. Yeah,
of course.
Interesting, because there's not a ton of property that's priced at that, right? There's not a whole lot of property that is at that number. But when that type of property starts to move, it creates a ripple effect through the entire marketplace. Mm-hmm. If people are willing to risk that kind of money on property in these kind of circumstances, it kind of has a trickle down effect where, I'm looking at, maybe I want to buy a house that's 1.5 million or something to that effect, and I'm sitting in a $600,000 condo. Should I be making that $1 million swing right now? Well, if somebody's going to make an $8 million swing,
right,
maybe it's a little safer than I'm reading.
Yeah, if very high net worth individuals are feeling very confident in putting that level of money into the real estate market, maybe they know something.
And it's also a bit of a function of how much of that $8 million is at 1.65%.
Sure. Yeah. There you go. Yeah. It's inexpensive money. And I'm sure they can take the rest of their money and make more than 1.65%.
There you go.
One other thing I just thought of too here, Ryan, is let's touch on sort of the vacation property market.
Yeah.
Because it's been kind of interesting to watch. We've both done a couple deals on islands recently.
Yeah, we have. Yeah.
Ryan bought a beautiful home for a client on Bowen. I'm midway through a potential deal here on Galliano. And just by being over there, you can tell the amount of interest levels that have peaked.
Totally.
You talk to the local agents there, and they're just saying the interest levels for vacation properties, I think it's at an all-time high.
Yeah, I mean, when I was in Bowen, I was actually speaking with Dee Elliott, who's a great realtor, someone I had a great privilege of doing a deal with. She was telling me that Bowen Island typically does somewhere around 50 to 60 deals a year. And right now, I think when she told me this, it was late August, they had done 44.
Wow.
Right?
Huge jump.
So, it's a lot higher than it was the year before. And I think, again, this is more COVID that's pushing people into these properties, being like, well, now I don't have to work again for 5 days out of the week downtown. So I'm going to go find a property that I can work from home and get all the other things I want. And we're seeing that, right?
It's a very similar story to inland.
Yeah.
You talk to agents that are doing deals in, let's say, Shuswap or around Kelowna on the lake there.
Totally.
Prices 30 to 40% up from last year.
Yeah.
Prices.
Wow.
Just because the demand is incredible out there.
Yeah. And it's not going anywhere for at least in the short run.
Sure. Next summer's
looks like
you might still be here too.
Absolutely.
Right?
I can tell you right now, I just booked a Tofino trip 9 months in advance because I know in 9 months it's going to be impossible.
That's right.
Right. Barring any vaccine.
Whistler too. Whistler is having a season that I don't think I've ever seen. And having grown up there, I kind of keep a close eye on it. And Whistler also, detached homes, all-time high.
Yeah.
The price is just, the demand is massive up there.
Well, we've got a listing also in Steveston, neighborhood that I grew up in, and we're seeing now brand new construction at 2,000 square feet for $2 million.
So it's $1,000 a foot
in
for detached in Steveston.
Brand new, but sure. We're seeing those levels. The really, really big homes, it kind of drops down to $750 kind of price points, but man. Yeah. $2 million for 3,800 square foot lot and a 2,000 square foot house.
Ooh, you know what else? I mean, we just came from a little video seminar that we're recording over with our partnership at the Bank of Montreal, and one of the high level mortgage specialists there was talking about their levels of activity. And, I don't think we can cite names quite yet. I haven't asked permission, but the bottom line is the Bank of Montreal is, quote unquote, has never been busier in the mortgage space than they are right now.
Yeah.
Ever.
So,
it's kind of indicative. And of course, we all know what happens once the mortgage guys get busy, then
the marketplace will pick up.
That's it. There's deals that are following that, right? People are getting financed first, and the deals are coming second. So
that's your activity measure from the finance side.
Yeah.
Right.
So without foreshadowing too much, I think it looks safe to say in the early data already, the early sales data for October says we're probably going to see some pretty similar or comparable numbers to September sales in October.
Yeah.
It's still hyper active right now.
So now, like the looming question in my mind when I hear these things, it's like, because I think up until this point, we had all predicted that, okay, well, we're going to have a decent summer because we didn't have spring. We've got all this pent up demand. We've got low interest rates. And then COVID's going to hit in November or late October, and the whole world's going to catch on fire again. We're all going to be locked down. I don't know if that's coming or not at this point. I can't speak for the province. I have no idea in terms of what's going to happen with healthcare. But the activity levels there, I guess it could shut down overnight, but activity levels are certainly showing that people aren't slowing down.
Yeah, no, that's exactly true. Again, we are surprised every single month here, and at this point, we're taking in the data and we're keeping our clients safe, and we're sharing knowledge. But if you want to know what's going on in your specific area,
Vancouver continues to be an incredibly resilient space. Yeah. Like it's just everyone loves to know when it's going to pop, but it just keeps debunking that all the time. Yeah. And I don't know, maybe we can't see the whole picture, but
well, let's be honest here. The governments and the banks have a vested interest in keeping the real estate market afloat.
Yeah, they do.
They protect it. It's almost literally their own nest egg.
Yeah.
That is, on a very top level way of looking at it, why I believe that the powers that be will not let the market crash.
Property transfer tax. Sorry.
There you go. Yeah. They make a few dollars from that annually.
A few billion.
So, if you have this golden goose and you have control over keeping it afloat, they will.
You'll induce it.
At least that's what they've shown us historically.
Totally.
Right? So,
and Canadians have responded by saving the money that they've been given too. We've been seeing, in large part anyways, we've been seeing 26% gains in savings, right? That money is going to get allocated somewhere, right? And I doubt it's going to be in depreciating assets in a time like this.
Yeah. I think something we could touch on now too here, Ryan, is dun dun dun.
Oh,
the mortgage deferral cliff.
Oh yeah.
Now we'll say first, of course, that we've actually done a podcast dedicated to the quote unquote mortgage deferral cliff, as we are now in October, and for most people and most banks, that cliff, the deferral period ended at the end of September. Yeah. Right. So mortgage payments are now back and due monthly starting basically October 1st.
Right.
Again, this is the deferral phase, right? So even if somebody doesn't pay their mortgage, it doesn't really hit the bank's radar for 3 months. Yeah. That's when they're technically in arrears, 3 months. So we're October, then November, then December. So we're not even going to really hear any arrears
deferral
information up until probably early next year. Some banks of course are going to share their data and let us know who's starting to become delinquent, but as of today, based on the savings, the cliff isn't happening today, right? But we do encourage you to listen to our podcast dedicated to exactly that, because we brought in our colleague Tyler from Pilot.
Well, totally. And I and this whole idea of it being a cliff suggests a fall. It suggests that it's going to rocket to the bottom. Do I think that every single mortgage is going to get paid back? No. But do I think that it's a cliff for deferrals? No. It's got to be a bit more gradual than that. There's so many systems and policies that have been put in place since COVID to protect that from happening, that the banks they would be calling for it already if they saw it coming.
Yeah, plus there's something called mortgage insurance in place in case of default.
But isn't that where that came from?
Yes. So even though they insure against it, they think it
they're
can
calling
still
for it.
Yeah. Well, let's keep in mind, though, too, I believe the number is 90% of mortgages in British Columbia are uninsured.
Right.
Meaning you've got equity in your home. And that leads me to something else here. People, you talk to financial advisors, you talk to banks, the one payment that people are going to make, no matter how broke they are, is their mortgage payment.
Absolutely. They're not going to lose the roof over their head.
They're not going to lose the roof over their head. They're not. You're going to find a way to say that. Because what's the alternative? You lose your house, you can't walk around the corner and rent somewhere for free.
That's right.
You still have to pay to have a roof over your head.
And further to that, it's also in the bank's interest. Yeah. It's so involved to get somebody out of their property. And it costs a tremendous amount of lawyer fees. They'd rather work with you, their client, to come up. Maybe they'll extend your deferral period. Maybe they'll change, I don't know, how much you pay back and when you pay back. But they're going to work with you before they're going to kick you out.
Exactly. That's just it. So the banks don't want you to miss payments.
Yeah.
You don't want to miss your payment.
No.
You're going to find a way. And yes, we're not trying to make light here of anyone who lost their job and is financially struggling, but we do know that there's a lot of equity out there and there's a lot of people that are willing to help. And, if you are in a troubled position, have that talk with your bank, right? They may absolutely give you a few more months of deferral if that's something that you need.
Agreed. Yeah. Okay, well, I think that kind of covers a lot of maybe the first half of our discussion. Maybe we'll just dive quickly into the numbers here for those robust nerds out there.
Yeah, my people.
Well, we just had a conversation, so that was for mine.
Okay. So, as we always do, we're going to start with Greater Vancouver as a whole. This includes all property prices. Like we mentioned earlier, year-over-year change, we're up 5.8%, bringing us to $1,041,000 for the average home.
That's up $57,000 from $984 the year before.
$57,000.
Yeah, just to live in your house.
Yeah. Again, we touched on median and average, both of those at all-time highs.
Yeah.
All-time highs. And it's just eclipsed those heights of 2016. So if you watch this, if you check out our YouTube channel, we do have overlay graphs that demonstrate this. But yeah, median and average prices at all-time highs for GVRD.
Yeah, don't take our word for it. Have a look for yourself, right? Again, the whole story of this month has been the volume of sales, right? So 3,643 homes sold in the month of September. That is 56.2% up from the 2,333 units we sold last year. Incredible.
Yeah. If you have access and you look at the graph that we overlay here, it's like a rocket ship taking up. It's incredible trajectory.
Yeah. You see a blip of when COVID actually hit.
Yeah.
And then it just went, okay. It went.
Again, we only have 3 or 4 days of data in for October, but the current trajectory, if it should sustain, is about 3,750.
Yeah.
So
that's incredible.
It's still here, right? Yeah. Winter is being pushed back.
Winter is coming.
Just later.
Yeah. Okay. Thanks, Jon Snow.
Yeah. All right. So inventory, though. So we're seeing new homes coming online a lot.
Yeah.
32% almost increase year over year, which is, again, a bit of a low-lying basis from last year. But we're talking about 6,400 new units were listed in September.
Yeah, that's up from 4,866 the year before. That's a 1,500 unit rise. Wow. Now, that is due in large part to people recognizing the fact that the market is moving and they're trying to get good numbers for their properties. But I do want to say that at a minimum, 1,200 of those are downtown condos.
There you go. Anyhow. So inventory, we're about 13,100 right now.
Total inventory.
Total inventory, thank you. This is a 2.6% decrease from last year.
So that's the big picture.
There's the big picture.
Right? A lot of the supply that's coming onto the market is coming on in the later half of the year. That's without a doubt. But that being said, the demand is there to meet it. In fact, exceed it.
Yeah. So it was December of last year when inventory kind of hit its recent bottom cycle, about 8,500 units.
Wow.
It's gone almost straight up since then.
Interesting.
But, if you pull back and look at the 10-year chart, we're still only about right into the 10-year average-ish of inventory. So we have normal inventory today.
Normal operating levels
Yeah.
right now for supply.
Yeah.
For supply.
And this is after jumping, 36%.
Yeah.
So month or year over year rather. So it's
Yeah.
again, low-lying base is why we're seeing these sales to active listings ratio where they are, because this inventory has been craved apparently since even December.
Yep. So speaking of sales to active, the average rate right now for all property types, that includes the condos that aren't doing so well. It also includes the detached homes, which are doing much better, and the townhomes, which are on fire. A change up of 10.8%. So last year, this September, we were operating inside of a balanced marketplace with a different trajectory. Now we are operating in very much a seller's trajectory.
That's it. Okay. Let's jump over here now to Vancouver West, an area that we predominantly work in, helping people buy and sell homes. Starting with the detached market, we're going to go a little more in depth here, look at detached condos and townhomes. Detached market, yeah, exactly. So your average, Ryan's shaking his head here. The average detached home in Vancouver West is $3,085,000.
Yeah, and that's up $140,000 from September last year.
Yeah.
That's a 4.7% change, and that's incredible. It's just living in your house to make $140,000.
Yeah, and also $140,000 harder to buy this year.
Yes,
if you waited.
Well, and also $140,000 tax free.
Yeah, there you go.
Right.
So far.
Yeah. Fair enough.
Well, yeah, cross your fingers on that one.
Yeah, that's another podcast.
The demand is insatiable. Look at this, a 70.5% increase in sales for this home type. And we're at $3 million.
That's crazy. So when Dan brings up the fact that big money is moving, and I know we brought up 8 million, but big money is still 3 million plus.
There you go.
And we're seeing a 70% gain.
Yeah.
Holy cow.
That means 104 homes sold just last month at the $3 million average price tag.
Yeah. And comparatively, you look at the newly listed homes, right? So we've got the demand change of 70% and the supply change, which is only 13.7%, right? So demand far exceeding supply here, which is pushing price.
That's right. Again, inventory is the main indicator of that. We're at 605 units available, but this is down about 17% from last year.
Yeah,
so
at 3 million.
We have less inventory and we have sales increasing.
Yeah.
So it's just getting eaten away right now.
It is. Again, we already talked on the active to sales ratio here, but ultimately we were in a buyer's market this time last year. We are up 8.6% and well inside a balanced market for this asset class.
Exactly. Okay, looking at townhomes now. Vancouver West townhome, average sale price, $1,164,000.
That's fantastic. If you live in a townhouse, that's up $65,000 over this time last year, a gain of 6%. And you have the most desirable asset class. That's the other thing.
Yeah. Townhomes, as we know, at that, 36%.
Yeah.
So the sales to active listings ratio. So lots of demand for these.
But it gets even crazier.
Yeah. You tell them.
Well, so September 2019 on the west side of Vancouver saw 27 townhomes sell. We're up to 50 this time. So a change of 85.2%.
Massive demand.
Huge. And then we look at the supply side, right? So this time last year we had 94 units listed. This year we've got 132. So we have a supply increase of about 40%. However, that's still a variance in supply and demand by roughly 45%.
There you go. Inventory, like you mentioned, down from last year off a low base, which again is going to push your sales ratio and obviously price up. Sales ratio it's actually doubled from a year ago, but we were at 10% a year ago.
Yeah.
So we've gone from definitely a buyer's market all the way up through balanced and now just into the seller's market for this type of property in the span of only 12 months.
Yeah, in the west side of Vancouver, the more expensive side of the city.
Yeah. Now, here's where we really want you to pay some attention, and now we get into condos.
Yes.
Because condos are acting differently for all the reasons that we spoke of earlier. Condos currently in Vancouver West, your average condo is $782,000. Still a big price point, and it's actually up year over year by 3.7%, or about $27,000. But, and here's the big but, prices are also down 3.7% since their recent peak in, I believe it was March. And it's on a very downward trajectory with that rate of decrease definitely increasing in September.
Yeah. And I mean, so when you look at this historically, it's going to sound a little bit better, but as we get to the end of the stats package here with condos, you're going to see the story starting to really change, right? So on the west side of Vancouver, we saw roughly an increase of about 25% year over year in terms of homes being sold. So September 2019, we saw 300 units sell, and in this September we saw 377. That is a demand increase of 24.8%. Now, when you look at the fact that in September we've seen 977 newly listed apartments, that's up 43% from the year before. So we have an issue here because we are looking at supply channels being up 43% and demand only up 24%. So we're going to start to see that inverse relationship take effect and push prices down. Our total inventory numbers right now for condominiums on the west side, 1,929. This is another 24.5% year over year change. It's an increase compared to the 1,500 that were listed the year prior. Again, this is a lot of people thinking that the market generally is doing quite well, but not really understanding what people are buying and why they're buying them. We have a sales to active ratio that really has 0% change. It's exactly the same as it was this time last year at 19.5%, which is inside, actually, technically, a balanced market.
Perfect. That's a great summary. Those are all the property types in Vancouver West. Let's jump over to Vancouver East now, because the Vancouver East is an incredibly active market right now, and definitely worth a nice close look at.
It's where the heat is.
It is. And why is that? Affordability.
Price, yeah. Look, not everybody can afford a $3 million home, especially when you cross the cross Main Street and you can pick up a home for $1.5 million.
That's exactly right. And he's saying that number because that's exactly what the average sale price is right now.
Yeah, it's right in front of me.
So, we're 1,499, 100 for your average detached West home. And it's exactly half of what it is, next door.
Yeah.
A 5, 8, 10-minute drive.
That's right.
And you're half the price. And that's why the demand is so incredible. And I mean,
it's interesting though, because that went up what did we say, 4.5% or 5%, I think is what it was. I think it was 5% for the detached homes in the west side of Vancouver.
Right, sure.
Right? You look at the year over year change here, we're looking at 9.2%. Now, there was $140,000 that was made in your $3 million home there.
4.7%.
Yeah. And that has now, that equated to 139,000, but we're looking at 126,000 gain here on the east side of Vancouver. So for less money in, you're getting a much better result on your money.
Sure. Yeah.
Right. And that's just the numbers talking here.
Right. Yeah. So, looking at this very impressive chart, what is that? About the middle, maybe summer of 2019, Vancouver East detached kind of hit bottom as far as the most recent price cycle, and it's been almost directly up ever since.
Totally.
So it's on about a 14-month tear so far.
Yep. So what does that mean? Homes sold year over year. This time last year we were at 109. We are 57% up from then at 171 homes sold this year.
Whew, huge demand.
Yeah, big change.
Here we go. Demand is well, actually, look at this. This one is interesting. The supply last month went up 74%.
Yep.
It must have been a very, very low baseline to jump 74% and still have the the sales jump 57%.
Yeah, well, I also think that realtors are calling their clients and saying, hey, look, the demand on the east side of Vancouver, it's here. This is where people are wanting to be. Put your place on the market. Yeah. And we're seeing that, and they're getting eaten up.
That's it.
Right? They really are. Look at your total inventory year over year, and then it kind of just says it all, doesn't it?
Yeah. So inventory, even with a 74% jump in sales from last year, we're still down about 19% in total inventory. From last year. There's 544 homes available last month.
Yeah, and that compared to 645 the year before, which I can tell you, certainly the sale rate wasn't what it was now back then.
Yeah, and you were 120K less back then.
Well, actually, the sale rate was 17%, which puts you in a balanced market.
Yeah.
Right?
Yeah.
And now we're at 31%.
31.
We're double.
Yeah.
Just about.
Yeah.
Right? Which is, it's a huge jump. Huge jump.
So if you are thinking about selling a detached home in Vancouver East right now, you are all but guaranteed, considering that it is priced right,
Totally.
marketed well, and in good condition, you're going to sell it in the first week with multiples.
Yeah, and that's what we've been seeing all over the place. So, okay, let's talk about townhouses.
Yes, as we talked, these are very in demand. Vancouver East has the price point.
Yeah, it really does. Sub-million mark, right?
Yeah, so we're $926,000 for your average Vancouver East townhome today.
Yeah, that's up $75,000 from this time last year. Very similar performance at 8.8% gain compared to the 9.2% in homes, detached homes. So again, and you look at the curve on this one, the actual graph, it's just going north.
Yeah.
It's just straight north.
It's a very sought after type of home. There's very limited homes there too,
very
right?
much
So these numbers that we're talking about, I mean, sure, the sales are up 54%, but that only equates to 37 homes.
That's right.
Just because it's a tiny bit of availability there.
Yeah. It's an asset class that, I mean, so many of my clients want, and there's just so little of it available.
That's it.
You know? I don't think this is going anywhere. I think townhomes are going to be a very strong performer for years to come.
Yeah, they're trading fast, as you see here, right? We had about a 27% increase in listings, which only equals 76. But encouragingly, or interestingly, we're up 20% in inventory year over year.
Yeah.
Right? So that's, 113 townhomes sold last month.
Yeah.
Which is up about 19, or sorry, up 19 from the year before.
Yeah.
But again, you look at the sales ratio. I think it's the highest of our report here today.
Yeah, 33%.
33% sales ratio, well into seller's market territory.
Big time.
And up from a year ago. Even a year ago was in seller's market territory, right?
I
26%.
Yeah. And I really think that the inventory numbers are where they are because there's also some new product that's coming online that's been, under construction maybe for the last year. So we're starting to see some of that. Still not nearly enough.
Right.
Like nowhere close to meet the demand.
Sure.
Right. And anyways, that being said, let's move on to condos.
Condos. So we know Vancouver West condos are in a downward market right now. They just are. Vancouver East, we're seeing price point be more attractive in the East for the other two property types.
Yeah.
So what are we seeing in Vancouver East for the condo market?
Sub 600K is your average price point, right? So this time last year we were at about 563,000, and we're actually up to about 596,900 now. So up 6%. A very respectable number, $33,600. With that being said, though, the rest of the stats.
Well, and let's also talk here. It hasn't come down as much as Vancouver West condos have, right? Vancouver East condos, they kind of hit a pause price-wise once COVID sort of took hold, right? March, April, took a bit of a dip, came up a tiny bit here, as you'll see in our graph, but so far it's maintaining.
Yeah.
So far it's maintaining, and again, I think it's largely price point, but if I had to make a guess here, I'm going to call that Vancouver East condos are going to see a softening in prices as well.
Yeah.
I don't think it'll be as deep as the West, but you will see these prices soften.
Or maybe as deep as downtown.
Sure.
Right. Just because the price point is a bit more attractive, a little easier to get into. You're also just not quite as dense, maybe, as the downtown core and some other areas, right? So, in any case, let's figure this out. So this time last year, September showed 148 homes sold. We're up at 197. So actually a 33% increase in volume sold. The newly listed supply numbers are actually up big time, up just about 100 units. So last year we were at 293. This time we're up around 392. So significant supply that's up. That's newly listed. Your total inventory as well, 602, which is 102 more units than this time last year. And this is where it's starting to get a bit interesting, right?
Yeah. And again, somehow a year ago, your sales ratio was almost just under 30%.
Yeah.
It's gone up. We're almost at 33% sales ratio.
Yeah.
So you've got this demand, yet you've got bit of softening prices.
Yeah.
So I think people have kind of seen a ceiling as to what condos are worth right now, but they're still trading hands because there's a lot of lateral movement. I know people that would go out of, let's say, a downtown one bed to get that second bed on the east side.
What I was just going to say is, people aren't necessarily getting out of condos altogether. They're getting out of the really dense small shoe boxes, and they're getting into a much more livable space, something that doubles as an office space during the day or something to that effect, right? So it's not that condos are going away per se, but they're softening because of a repurposing of real estate.
Okay, so that wraps up our in-depth look at the data for Vancouver East West and also GVRD. So every month we like to pull out and discuss a notable property of the month. And while we kind of touched on it earlier, we'll do a bit of a deeper dive here. And it's more than just a notable property of the month. It's a notable property type of the month, right? Yeah. So again, we are talking about a $13 million sale price. And that was the highest for the month last month.
Yeah.
Beautiful home in Southlands, listed for 16.8. I think they did a couple corrections, ultimately sold for 13 million, assessed around 9.8, so well off the mark. But
isn't that incredible? I mean, they're almost $4 million off.
Yeah. As we know, for luxury market, the assess is vastly different. But again, the reason we're talking about this is because this home at 6630 Blenheim was one of 7 homes that sold over $8 million last month.
Yeah.
There were 7 homes that sold over $8 million in August as well. So August and September, 14 homes. There was only 31 homes total sold in 2020 over that price point.
No kidding.
So 45% of all the ultra luxury over $8 million price tag homes sold in the last 60 days.
Wow.
Talk about high-end confidence in a marketplace.
Totally. I wonder if that's also due in part to a lot of what's happening in the stock market and people taking their money out and putting it somewhere safe now.
Well, and the wealthy getting wealthier.
Yeah.
Because of this.
Look at it. I mean, this is $13 million. I mean, a stunning property by all accounts, but anyways.
Okay, and now we get to the point of the podcast where we give a bit of a prediction as to what we think is going to happen moving forward. It's almost impossible to predict 6 to 12 months out in a predictable market-ish, let alone global pandemic, recession, and so forth. So, but we do also like to give our advice on what we do think is going to happen for at least the next 3 months as an example.
Yeah. So COVID aside. Why don't we start with what's going to happen with money? Because I think it's a really important thing to begin with. The Bank of Canada consistently now saying that interest rates are going to be low for years, right?
Yeah, The Bank of Canada is seeming very comfortable to say at least end of 2021, 2022. But you got to look south of the border as well, right? Because American economists and banks, they're saying they need till at least 2023.
Yeah.
And I'm talking summer, fall, winter 2023. And of course, being Canada and so tied to the States, we can't make a move before them.
Totally.
We can't start increasing.
Nope.
Right? Nope. So if it's going to take America till the end of 2023, does that mean Canadian interest rates may be this low for the next 3 to 4 years?
I believe so. Possibly. I mean, it's a big hashtag, possibly.
Sure. But no, of course. Nobody knows what's going to happen tomorrow. But the indicators, super curveballs aside, are pointing that way right now.
And there's some level of predictability to this, and that is, I think, when you look at the fact that Canada's emergency wage subsidy program is now expected to be in place until summer of 2021, we're looking at an additional $40 billion of debt that we're going to incur. The government is going to need to stimulate the economy, right, in order to pay this debt back, or unless it all just suddenly resets, because what is credit anymore?
Right, sure.
But ultimately, where we were this time last year, our budget deficit is up $148 billion.
Yeah,
that's staggering.
You can't even tax that back as hard as you try.
No,
it's.
I mean, the year before we were at 1.6 to give you some sort of perspective.
Yeah,
right.
And that was, I believe, an all-time high at the time.
Yeah. So how are we going to pay $146 billion back? It's certainly going to require the rest of the country to spend some money, right? anyhow, it doesn't really negate the fact that the government's still going to look to keep interest rates low to encourage spending, right?
That's right.
I mean, that's the only way they're going to get their money back is, well, that and taxing people who make more money, right?
Yep.
I have also heard, and it's hearsay, that the capital gains tax might be increasing, and that's one way that they're going to pay it back, from 50 to 75%, but we can talk about that some other time.
Property-wise, we are seeing absolutely sustained demand for the detached property market, especially up to the $2 million mark.
Yep.
Townhomes, again, free for all. People want these more than ever.
Yep.
We expect for at least October, for sure, probably good trickle over in November, to see that demand sustain and prices to increase for both of those.
Yeah, and insolvency rates are at their, I think, 23-year low right now. Sorry. Is that also true or not true?
No, it is. It's since 1997 we have not seen insolvency rates this low.
Right. So
people are prepared for a cliff.
Yeah,
they seem to have money to be able to pay for things right now.
I mean,
Thank you, Trudeau.
Well, in the event that something happens, and Canadians do what Canadians do best, and they've saved a lot of that money,
That's
right?
it. Condos, on the other hand, I firmly believe we are going to see softening prices for the foreseeable future.
Yeah, I really think that the asset class division right now, townhomes and single family is going to run away with the market, and I think condos are going to struggle here until we open that border. Right, the border is condominiums. They favor people who are moving to the country for the first time. Right, they're easy to get people in and out of, and they're not nearly as big of a commitment as something like a home or a townhome. So until we start opening that up, it's going to take some time. So thanks a lot, guys, for listening to the TVL podcast. Just a reminder that you can download this on Apple iTunes. You can also get it at Spotify, or you can go direct to our website, thevancouverlife.com, and get some downloads there. The TVL market report will be available for download in the next 48 hours here. So please visit the website again, thevancouverlife.com, to get that download.